market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Asian markets this morning, they're mirroring what the US market has done. Asian markets have opened up on a positive side.
Was willing to dismiss the tariff effects on inflation as transitory.
WSJ and the Bloomberg stories, which said that tariffs could be more targeted and less drastic.
Maybe post the recent run, taking some money off the table if you're a trader may not be such a bad idea.
There's limits on housing loans. The price limits have been increased.
Volume growth has continued to surprise on the upside, specifically for MGL.
There you go. I mean, we're at about 23,753.
Some of our schemes will be overweight more in capital marketplace, somebody more into NBFCs or financials. So I think combination is what possibly makes sense to be overweight for now.
Restaurants Brand Asia, Central Bank of India, as well as Punjab and Sind Bank, all three of them actually see divergent trends.
March 24 has been a good day for FPIs investing into India. There has been a relaxation on the tax front.
Today is a day where you're seeing quite a bit of consolidation emerging as far as the broader end of the markets are concerned.
Okay, today is a more normal kind of a day, which means that we're not, moving up rapidly. It's more mixed. It's more two-way. It's not one-sided. But 6 days, we've had a non-stop one-way move, and it's good, perhaps, to see a little bit of consolidation. I'm Prashant. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios with me, my colleagues Nigel and Reema. Guys, hi, good afternoon.
Hi, good afternoon. And it's good to see that at least the large caps haven't given up ground. They're consolidating, but they're flat right now.
Well, that's right. And, though the breadth of the market is negative, there are plenty of stocks actually that are moving around, and we'll tell our viewers about a few of them, like the graphite electrode players. They're up 10-15% or thereabouts. There are pockets that are still, giving you a good amount of gains.
Absolutely. And, the graphite twins, so as to speak, when they move ferociously. Double-digit gains, and they move together. And Nigel will tell us in a bit from now in terms of what's happening. But just a quick 2 words on the market and what we are seeing. So we had 6 days of a one-sided non-stop rally, and today, I mean, can you call this a pause? Because we are still up 0.25% or so. But in the context of the 150, 200-point days we've had, this is a pause. Small cap index, more broadly, it's a pause for the mid and small cap space. 1% lower in the small cap index. The last I checked, mid cap index is down about 0.5. On the Nifty, we crossed, and we've been galloping higher. From the 20-day to the 50-day to the 100-day to the first retracement to the February high, it's all happened in 6 days. So 23,807 was the February high. Intraday, we crossed that. We're under it now by about 100 points. That's naturally the first resistance. And I think it's possible that for 2-3 days, you are actually going to see some consolidation. We said in the morning as well. You got an event on the 2nd of April. Coming into it, you've got massive gains. It could be a bounce. It has been a bounce from sold-off levels, but it's been it's gains nevertheless. Very fast-paced ones are that. So, it's possible you get a couple of days of consolidation, not a bad thing at all, and then maybe the uptrend resumes. Nifty Bank, the Nifty support is at 23,400, which is roughly the 20 hourly simple moving average, and the Nifty Bank 20 hourly moving average is to 50,700. So these are 23,400 and 5,700. These are near-term supports that you need to watch out for on the way lower. But otherwise, I mean, just a bit of a pause after fantastic gains. Nothing otherwise. It's more stock specific, which I think we'll spend time on. Prima.
IT is catching up after the drubbing that it got in the month of February and early March. So the Nifty IT index is leading from the front, 1.7% up today, adding to the 1.5% gain that it had yesterday. So in 2 days, the Nifty IT index is up more than 3%. And the gainers there include Infosys, where Jeffrey says the 20% correction seen in Infosys perhaps is a bit excessive. HCL Tech, TCS, Wipro, all on the gainers list with gains of more than 1%. Banks have cooled off. It's come off more than about 400 points from the day's high. That's the Nifty Banking Index. PSU banks are weak. The Nifty PSU Banking Index is down close to about 1.5% now on the Nifty PSU banks. Individual stocks in the frontline space which catch your attention. Ultratech Cement right on top, 3.5% up. Trend has been flip-flopping both sides with big moves. Today it's up nearly 3.5%. Bajaj Finance, Finserv, these stocks continue to gain ground.
Well, that's right, Rima. Well, let's welcome Mitesh Thakkar onto the show. Hi, Mitesh. Good afternoon and good to see you. Well, some kind of profit taken from the broader markets, though the headline index, well, that continues to hold up in the green. What are you doing? I think earlier this morning we were discussing closer around 23,600 could be a good entry opportunity. Buy on dips continues?
Good afternoon, Nigel. I think exactly that's the point which I was trying to make, that you will get a decline or pullback at some point in time. And to my mind, I think, it started, we got a low of 23,627 or thereabouts. So that's the area which, you would want to buy 23,600 levels, give and take 25, 30 points. Similarly, on the Bank Nifty also, I think the first support or the first pivot is clear about 51,500. I think let it come down to those levels and then we'll take it from there. So that will remain long, identify.
Oopsie. Okay, all right. I think the message was to remain long, but we'll try to get Mitesh back with us in just a bit to complete that point. Let's focus on a couple of stocks that are buzzing in trade. And graphite electrode companies, HEG and Graphite India, both of them are on fire today. And that could be probably two reasons. They're moving on rather large volumes. Point number one, Japan has imposed tariffs on China's graphite electrode imports from the coming Saturday itself. Now, the Japanese market is to close to around 60,000 tons, of which close to 25% or 15,000 tons is imported from China. So the street believes that the Indian graphite electrode companies could fill in from these Chinese imports. So that could be one reason there's an opportunity in the Japanese market. Point number two is there could be a price hike in the offing from April 1st itself, because Chinese producers, they went ahead and they increased prices of HP grade. That's the high power grade. And so the domestic prices, they as well will follow suit. And effective, April 1st, it's likely graphite electrode prices for HP grade could go up by around 7 to around 8%. And this will positively impact roughly around 25% of the sales mix. So both the factors at play. One is they're looking to fill in the gap that will be created in the Japanese market via those Chinese imports. And the second factor is price increase after a while could be accepted by the street. So two probable reasons why the graphite electrode companies are buzzing in trade. Deepak Shenoy joins us on the show. Hi, Deepak. I'm not sure whether you track these names. A few years ago, they rocketed up. Then the stock saw a sharp correction, and their margins have seen a sharp correction from the peak. But now you have a couple of triggers. Probably that the steel cycle is on the revival. There could be some export opportunities and a price hike as well. All of them could bode well. Any view on these names?
Nigel, I don't have too many views on them, though, they're a set of spiky stocks. So when sometimes there are issues with, like, for instance, the last time it was because China suddenly decided to shut down a lot of operations around, their core iron ore based plants and move into electric arc welding. And because of a move by even Europe to do this, there was a revival in electric arc furnaces all over, and they provide the raw material or one of the consumables in electric arc welding, electric arc furnaces. So therefore, you get a sudden bump in margins, and these margins will collapse once things get better. There are two big companies, Tokai Carbon I think in Japan, and Graftech in the US, much bigger producers of the same materials. But in India, because these are two very large compared to the Indian size of the market, they tend to get impacted by international prices. Japan's just done, I think, a 95% duty on anti-dumping duty. So we can assume that prices are actually lower than what otherwise China wants. In general, or China is otherwise selling. But in general, the problem is this: America has put import tariffs on steel worldwide. Japan and Korea are large manufacturers of steel. I think the world is going to be flooded with steel from these manufacturers compared to the Indian manufacturers. And production dynamics might actually come down in the future. So you want to be careful about sudden spikes. So you want to play stocks like this, you want to play them on price momentum. but not really on fundamentals, because the fundamentals are just really, really fast. And I don't think the current triggers are actually strong enough for you to even see a sustained 1 or 2 quarter increase in margins. You might see something that's very, very short term, not more than that.
Okay, Deepak, stay with us. Mitesh is back with us. We lost the line there earlier. Mitesh, sorry, complete that point on the indices and then your trades as well, Mitesh.
So, Prashant, I was on the indices, my view was to use any declines to buy. I think that's the remains. And on the stock side, I think Axis Bank is something, which is showing extraordinary strength and is outperforming in a negative kind of market. So buy here with the stop at 1098. 1155, 1165 is my first target area. Eventually, I'm looking at slightly higher levels as well. And the other one which I like is Reliance, which has given a pullback towards support area. The first support pivot of gap around 1280. And the stock is now at about 1290, had a low of 1284. So buy here with a stop at 1277 for a target of 1315.
Got that. Let's talk about IT. The Nifty IT index is up nearly 1.5%. UBS today says there is more upside in IT names compared to downside. The key reason is stocks have corrected sharply, 15 to 20% lower on stocks. Valuation multiples have derated by 12 to 20%. Now coming to the fundamentals. UBS spoke to many of the IT managements and they said that yes, the uncertainty has increased, but there has been a very marginal impact on tech spending. And plus, there are counterbalances to US slowdown. For instance, Fed rate cuts could take place, corporate tax cut. So that could help, the overall fundamentals. So according to them, that FY26 will be tough. We will see some consensus earnings downgrades. But on the whole, FY26 will still be better than FY25. And therefore, valuation multiples should get back to the levels that it was in FY25. And therefore, they're expecting about a 5 to 10% bump up in IT names. Also, getting back to that point about valuation after the recent correction, they're saying the Nifty IT index is trading at a 5% discount to the 5-year average. TCS is trading more than 1 time below its trading 1 standard deviation below its 5-year PE multiple. So therefore, valuations are fine. They like UBS likes Infosys, TCS, Wipro, HCL Tech, all of them are buy calls for them. The only one which is a sell is Tech Mahindra. So more upside compared to downside for them. Deepak, UBS is talking about a rebound of 5 to 10% for the sector in the near term. Would you play for this tactical bounce from oversold regions? Would you play for it? Or do you think there is an investing case now in IT names, large cap IT?
Rima, I think the case is slowly starting to come because of valuations, but not necessarily in all of the companies mentioned. I think one of the problems right now is we don't know how these tariff issues are going to impact some of the companies' spending patterns in the US, especially if there are tariff impacts. There is going to be a change in spending, IT-related spending in a large number of organizations in the US, whether they're manufacturing organizations or retail, in terms of how they'll plan their road ahead. If you add 20-25% tariffs to China and Chinese products, especially in the small packages front, some of the way the retail expenditure happens will change. And I think in some cases it's positive, in some cases it's negative. BFSI might still continue to be okay for the time being, but again, a lot of it depends on the US not going into a recession. So I would say at this point, let's wait for the tariffs. It's just a week and a half away. We'll be able to figure out if this requires a large number of changes. And if it does, you might actually see more IT spends than less once you get to know the extent of the impact of the tariffs. Because things may change from regulatory technology perspective or in terms of what they might need to be able to enforce these tariffs at a company level itself and produce more need for outsourcing rather than less. Because of that, I think the future might still be bright, but we'll have to see the contours based on the traffic. So this 5-10% short term, I don't think I'd play for it. There are too many events in the short term that can derail any short term prediction like this. But at a 5 to 10 year basis, I think some of these companies might actually succeed quite well because they may be able to use this AI pieces to make themselves more productive and offer their customers a better price and value kind of equation. So we have some names, but I don't think the next 3 months are going to be very great.
Deepak, coming back to you, interesting thoughts there. Star Health is the next one we want to focus on. That's the health insurer, private health insurance company. IRDAI, the insurance regulator, has found some lapses in the claim settlement practices. Yash is here with details. Yash.
Well, Prashant, at the start of it itself, let me make it very clear that the insurance regulator, IRDAI, recently, just about a month ago, had conducted inspection on about 8 to 10 general as well as health insurance companies. Star Health Insurance was one of them. Now, what we've been able to pick up from our sources is that as far as that inspection is concerned, that concluded about a month ago, after which investigation into the content which was received from the inspection had begun. And what we've been given to understand is that the regulator has found some serious lapses when it comes to the way claim settlement process was handled at Star Health Insurance. When I tried to understand more in terms of what are the areas where these lapses are found, what I was given to understand there is that various areas, including the claims which have been repudiated, the claims which have been rejected, the claims, the time taken for claim settlement, even the deductions which were put as far as these claims are concerned. These are certain areas where the regulator has found some serious lapses when it comes to the process and how it was handled at Star Health Insurance. What I've been given to understand is that that investigation is still ongoing, and once the investigation against these various companies as well as Star Health Insurance ends, the regulator might look to take some action against Star Health Insurance for these lapses which it has found, and of course it finds if there are more going ahead in its investigation. We had also written to Star Health Insurance on this particular query, and we are yet to receive a response from the company.
Okay. By the way, Yash, thank you very much for that. That is with regards to this particular story. But last week, of course, was pretty big with insurance. That big Bajaj deal and entry of more players. And by the way, health as a segment is seeing a lot of activity as well. LIC, for example, is on record to say that they're in advanced conversation to buy a health insurance company. So a fair bit happening. I think Deepak generally, broadly, from what I remember, has a positive view there on life insurance companies. Deepak, but my question, I wanted to ask you about defense as a space. Stocks have bounced nicely. I don't know if you own any names, 30, 35, 40% actually across the board.
Yes, I think, some of them, I think, still continue to be a little overvalued, but the scope for growth is going to be even more now, given how Trump is behaving. We are going to see a lot more demand locally for locally produced equipment. And I think the private sectors needs to play a much larger role also in this place, because to a certain extent, the belief that only public sector can serve the defense services and all that stuff is a little bit old school. We can have 51% plus domestic ownership and still do quite a good job going forward. I think we'll need it. We're seeing this in railways in some cases where India is not able to meet a lot of demand. And I think in defense also we will reach that point. But a lot of the expenditure planned for last year wasn't actually fully done when a lot of orders have kind of been held back. But I believe that in the next year, we might see a significantly higher chunk of orders. It might happen, whether it is drones or ships or submarines and things like that. I think a lot of these companies will benefit. There's still a long way to go. And I know the scope of these companies have probably gone up 5x in the last 2 or 3 years. But I think there's another 5x that's still remaining in the next decade. So we should be seeing a lot more domestic defense companies do really well, and even arms of companies like M&M and all that. We own this by the way. Though there is a scope for those defense units also to kind of tremendously increase their sales from where they are right now. Still early days, but I think overall the space I'm very positive on. It's part of a couple of portfolios that we own. And I think I can't comment on the recent 20-30% fall. They fell 50-60% also. So I don't think most of them have recovered back to the highs of where they were last year, middle of last year. But I would say think of these as a 5 to 10 year play rather than what's happening right now. It may be useful to look at the overall market growing 5x rather than look at whether they've gone up 30% from the lows. That might not be so meaningful.
Deepak, thank you very much for joining in. We'll get into a break on that note. We'll come back and chat with Pashupati Advani, founder and chairman at Global, Foray on the other side.
Welcome back. So you got the market, which is, broader market under a little bit of pressure, and of course, Nifty still trading with the small gains. 20 odd points is all that is left now. We started at 230 with about a 0.25% gain. Pashupati Advani is founder and chairman at Global Foray. Pashupati, good afternoon. Good to have you here. We've had a fantastic and ferocious bounce. Have you been a buyer over the course of the last 10 days or so, or you've sat pat?
I nibbled, but not enough. So it has been a bit of a damn squib for me. But okay, a little bit of money is still better than no money. And also it brought back some of the positions that had gone down quite a lot. It's been nice, but I think we're going to float again. And I think we may even float down a little bit because except for certain sectors, I think that, we're in a range. And I would say 22,000 on the bottom, 22,000, 22,200 on the bottom, and maybe another 200-300 points from here in Nifty on the other side. So we're floating in a range. Bad news comes from the US. We're coming closer and closer to April 2nd when the tariffs are actually going to bite. And then we're going to see, because everyone in our part of the world doesn't know how to react to the tariffs, because they haven't yet enunciated what the tariffs on Indian companies are going to be. So let's see what happens.
Although, Pashupati, those who we've spoken with, economists, etc., they're of the uniform view generally, that actually our trade with the US is not that large. As a percentage of our trade, of course, as a percentage of US outside trade is very small. Our trade also is very small. So we're not big trading partners. So actual impact, if tariffs go up, it's indirect. So if tariffs go up for the rest of the world and global growth takes a bit of a hit, so that we are a lot more exposed to.
No, for sure. Global growth is obviously going to take a hit. There's no doubt about it because of the volatility and the changing sort of whims of President Trump. I think that he announces one thing and cancels it the next day. So I think that that's going to actually make some difference. But the reality is there's a lot that they can do against us in the sense that our service industry still pumps money into the US and pumps people. The people side is very easy because Elon Musk seems to have dodged the immigration department in the US. So who knows what's going to happen, if it's going to take a lot of money, a lot of time to get visas and a lot of time to get permissions for people to move over there. That's going to cause problems for our IT companies. But the reality of the fact is, I think that we are going to have to sort of make some changes, and those changes are going to be painful for us. And I expect some kind of, inflation all over the world.
Pashupati, you said you nibbled. You sound a little regretful that you didn't buy enough or buy more, but you did buy a little bit. So what is it
I am super conservative, and I bought a little bit of Paytm, and I bought a little bit of Zomato, and then I kept quiet and I left it. And I think that there were obviously opportunities in Reliance, HDFC Bank. The big parts of the index have actually moved up quite nicely, and they were also sitting targets looking for us to be able to buy into them. So I think that was a mistake. But hey, life happens.
So why not buy now? HDFC, Reliance, yes, they're not at the lows that they were about a week back, but you're not comfortable, after a 5% up move in these stocks?
No, so I'll tell you. I'll tell you what does look interesting are sectors. Reliance is also part of that sector, but I think that we should be looking at Reliance because it's always an interesting stock, and I think that it's moved up nicely and will probably continue to move up. I think personally that we're going to be in a little bit of a sort of hum and haw till April 2nd, and then after that we shall see what kind of tariffs actually hit us and what's hitting the world, and then take a decision, because I think it's time to keep the powder dry and be ready to buy if the opportunities come, and I definitely think that those opportunities are going to be there. A sitting duck has been the defense industry, because everyone is saying that we may stop buying armaments from the US and we'll have to make our own. So our own industry has to step up, and therefore that provides a great opportunity. And it's the government as well as the private sector that's going to get into all the defense stuff and start doing new capex in that industry. So that's kind of a no-brainer.
All right. Hi, Mr. Advani. Good afternoon. Good to see you. Nibble a little is better than not nibbling at all, right? So at least you got in some money, and you're sitting on some gains out there.
At least I didn't sell off stuff at the lows. That's the other thing that people have done.
Indeed.
Yeah, anyway, yeah.
All right. Mr. Advani, but the call on IT, I think the last time around we were chatting about this. You said you're not very optimistic on the tech pack. There is that threat of AI. There's a lot of uncertainties as well. And that call has worked out well, right? Because the tech index has actually underperformed. Year to date, it's still down close to around 13-14%, while the Nifty is more or less flattish. But various sell-side notes, yesterday we had CLSA, today we have a UBS note as well. They believe that maybe the time has come for IT. You're still staying away, or will you nibble?
See, the reality of IT is that it's a large part of our index. So unless IT stocks either become a lesser part of our index or, start to move. They've got some earnings, but I think those earnings are going to be under some pressure. And, I think the real issue is going to be this whole issue of H-1Bs and getting visas to get people into the US, which has been our major market. And I think that that's going to cause a slowdown and probably lesser results from the IT companies. So yes, I am still not bullish about that sector. But hey, who knows? I have been proven wrong, and I guess I can be proved wrong again.
No, absolutely. Now you are saying, Pashupati, near term, those who are watching you, I mean, although your time horizon is longer, but since you began by saying you're expecting a bit of potentially a move lower from here, back to about 22,200. Is that what you said?
No, that I think is the bottom. I think we may float down to 400-500 points super niche and just float, because I don't think there's no strong trigger. The good thing is the IPOs have stopped. So I think that's a good positive. So I think that net as money comes into the market, money has come into the market because some people have made a quick flip in China and have flipped money and come back to India and come back into the same things, having made money in China, because the Chinese market was up very, very strong over the last 30 days. So I think that that opportunity has been taken. This is a market everyone needs to be in. They can't be out of this market, but which sectors they choose to be in, I don't know. I mean, obviously a new player is going to put some money in IT because it's 20% plus of our index. But I wouldn't jump in with both feet, because that sector does have issues.
IPOs will start again. I think today in the newspapers there's that Manipal IPO, which perhaps is coming, could be a large one, as and when that happens. NSE, yesterday we heard from the SEBI chairman, WIP, right, work in progress. He didn't say work in progress, I'm paraphrasing. He said, well, we'll look at it. But of course, no timelines or anything of that sort. There's a lot more in the pipeline. Dreamer would know with the IPO KYC. Sorry.
They've stopped for this week 10 days. Now they're coming again. I guess they'll come in first week of April.
Well, the QIPs are back.
QIPs are back. And a lot of the lock-in shares, etc., right? I mean, which is a very large amount over the next 2 months or so. These are pre-IPO lock-ins, etc., which are opening up, and so on and so forth. Any other single stocks? You mentioned Zomato, Paytm. Anything else of interest to you? Right
Actually, I have been. I mean, one of my favorites has been Indus Towers, which is kind of working out in its own slow way. But
You're enjoying the dividends, but no price gain.
Well, it's okay. That's not a bad place to be. But I think that I think Vodafone may look interesting at these levels because they've got some relief on the tariff. Somebody thinks I'm crazy, but I think below par. I think it may provide a good speculative value, and we'll see. I'm looking at it. I haven't done anything yet, but I may just decide to jump in. So it's one of those mad things because I think that telecom is here to stay. It has to be in there. The government owns 30% of the company at $10. So, what's wrong with that? So, we're partners with the government in a lot of things. What's wrong with the telecom company? And they have got some benefit in this CUG. So I think that's going to be helpful going forward.
So you're studying both Vodafone Idea as well as Indus Stars, both of them?
No, Indus Stars I've got. So I'm just sitting
You've
on
got
it.
that.
I think
okay. And Vodafone Idea, you're flirting with the option of whether or not to get in or not, right?
Yes, but it's a totally speculative option, and it's an option that it's one of these. It's going to be 7 for 0 or 7 for 14. It's one of those. It's not really a stock that you pay for a 5% or 10% margin. So
what about IndusInd Bank? That's another one out there, right? The verdict is split out there. 600 to what?
Yeah.
Which way?
Yeah. So again, that's another one that one can play. See, I'm a great event-driven person, so I like these things. So in IndusInd Bank, I think there is some upside, but it keeps going up, and then bad news, and keeps going down, and now they're sacking. They're not giving any renewals, and they're trying to get a new CEO. So there's a lot of flux there. But in flux, there's always a chance to make money. So yes, I am looking at IndusInd Bank also.
Okay, all right. Thank you very much, Pashupati. A good conversation.
Thank you.
I look forward to speaking with you after the second.
Happy 25-26. Happy 25-26 for all of us, and let's hope 25-26 is a good year also.
I hope so. Absolutely. Thanks again, Pashupati.
Thanks.
I thought for an instant he's wishing happy, the next few days before Trump, 2nd April comes, and then we're hit with so many headlines. So I thought he's just wishing.
So I was told he has decided April 2nd because he didn't want to do it on April 1st because everyone might think it's April Fool's and nobody will believe it. So that's why the tariffs are coming on 2nd. That's what I was told, but I'm sure that's hearsay.
By the way, Pashupati, Reuters is reporting that the government here is open to cutting tariffs on some 55% on US imports. So, things are in motion. This is a completely Reuters story. They say government estimates hit to exports worth $66 billion from Trump tariffs. And they're seeing a hike of 6 to 10% for key US exports out of India to the US. So this is some stuff. So, preemptive measures in that sense is what the Reuters story is indicating. We'll take a quick commercial break. Pashupati, thank you again. We'll come back. We'll get a quick check on what's happening in dealing rooms. Nimesh joins in for that.
Welcome back. Well, a few stocks actually have moved to the low point of the day, and that explains why after moving up close to 60-70 points in the last hour or so, we're back down to just a 10-point gain. But it's that time of the day when we tell you what's going on D Street Chatter. Nimesh joins us to fill us in with what he's picking up. Nimesh, after a while, some bit of a cool off, but who's complaining? Some consolidation is par for the course.
Oh, by far the par. Actually, it's been a day of consolidation, but clearly, from a flow perspective, Nigel. I guess today's a day of much better buying. So that's the overall feedback from the FID. In fact, there's going to be a small MOC basket buying as well in some select stocks in the last 30 minutes. So that's something from a flow perspective. Even the mid-cap index, where the index is down 1%, even in the broader markets, the feedback is there is buying interest. In fact, for a change now, today there is reportedly buying in select small caps and micro cap stocks as well. I'll cover some of those names in D Street Chatter, but broadly, that's the sense from a flow perspective. Again, the sector of late has clearly been the PSUs. While some of the PSU stocks have seen some bit of profit booking, there is still buying interest at large from large institutions in the PSU basket as well. So clearly, Nigel, it looks like a day of consolidation. While we've given up most of the gains from the early morning trade, but there is buying flow or buying interest from larger institutions in today's market. Technically, we're heading into the big resistance of 23,900, so that's the level to watch out for. But because of the expiry and the big concern on reciprocal tariffs, for the next few days, you might see a bit of consolidation on the Nifty. But there is clearly buying interest in individual names.
and that outperformance is likely to continue. That's the sense I'm picking up as far as flows are concerned.
What about stocks, Nimesh? What chatter have you picked up?
Well, Rima, so the first on my list is Carbon Universal. While the stock has gave up most of the gains from the opening trade, but there is buying interest from larger FIs in today's market. So expect very high delivery volumes in Carbon and Universal. That's the first stock. Couple of stocks there is selling pressure. Zomato as well as LIC Housing Finance. Zomato is clearly clearly down 5%, largely on back of very strong selling. So looks like some FIs have turned net sellers again in stocks like Zomato. The third stock is Suzlon. While there is a Motilal Oswal initiating report, I understand there is going to be a small MOC buy as well in Suzlon in today's market. So watch out for delivery volumes there. And the last is a couple of stocks where I mentioned, within the broader market stocks, there is buying interest. JB Chemicals, Hudson Agro, and Grindwell Norton. All three stands out. In a weakish market, these three are buzzing into it. The volumes on the higher side, and there is buying interest from larger FIs in the broader market stocks, and these three names stands out in terms of delivery-based buying.
All right, Nimesh, thank you very much for that. So that's the chatter as Nimesh is picking up at this point in time. Mitesh is back with us with what he'd want you to do as far as trades go. So 23,675 now. Mitesh, what do you have?
So, despite the fact that the markets have come off, Prashant, my view remains positively biased, so we will keep trading on the long side. And I have more of, I've rather BTSC call than SCBTSI call. So, BTSC on TCS here, keep a stop just below levels of 36.47 and a target of 36.90, 36.95 can be looked at. And the other one which I like is BHPL, still in a good pullback. So by here, BTSC here, the start at about 212.7 and a target of 216.5, 217 can be looked at.
Okay, all right. Well, thanks a lot for that, Mitesh. Let's focus on the fairest names then. And post a 18% run in 2025 so far, JSW Steel has become the most valuable steel company in the world by market capitalization. This as it's overtaken ArcelorMittal as well as Nippon Steel. Now, even if you compare, JSW Steel with the other Indian companies' market capitalization, well, JSW Steel is by far much larger than the others by market capitalization. In fact, in comparison to Tata Steel, it's more than 20% higher at current reckoning. Brokerage firm Investec, they have a buy rating on the stock with the target price at around 1,100 rupees. They say the company is their preferred fairest play on the growth pipeline, return ratio profile, execution, and leverage management as well. They highlight that the company has delivered attractive shareholder returns in the past few years. That's based on the steady capacity addition as well as EBITDA growth that we've seen in the last 4-5 years or so. Now, here are a few takeaways from Investec's meeting with JSW Steel's top management. They say that the company is targeting 51 million tons of capacity by 2030, which they've already laid out a plan for around 43 million tons by 2027. Additionally, they want to ensure that the value-added products as a percentage of their total mix will be around 50 to 60%, which is good, right? They're also focusing on operational efficiencies by securing raw material in both the key inputs, that is iron ore as well as on coking coal. And they've also ensured that limited capex will be taken on board outside India. The street wants them to focus more on India, and that's precisely what they're doing. Investec mentions that on inorganic growth, they said that that's optional in nature and will be subject to various synergies as well as the balance sheet health as well. The management as well has remained committed on the leverage ratios, and they say that they're targeting net debt to EBITDA that will remain sub that 2.5 times in the medium term. On the regulatory front, they say that they have recently announced that 12% safeguard duty on flats that could aid pricing by around 3,000 rupees per ton. And the management remains very, very hopeful on the incremental policy aiding mining economics. And unlike peers, JSW Steel lacks legacy leases, which minimizes the impact of lease expiring as well. Finally, on ESG, the management says that they maintain that they're going to be net neutral in carbon emissions by 2050. The company is focusing on renewables as well as zero liquid discharge. So that's the big headline today. JSW Steel is by far the largest company by market capitalization across the globe. So thumbs up to that name.
Absolutely, and it's quite an achievement. coming through. Well, let's talk about another asset which has been sort of, up in the air for the last 10, 15 years now, 10 years at least. This is Jayaprakash Associates I'm talking about. Now, the race to acquire Jayaprakash Associates under the IBC process is heating up. Remember, for more than a few years, the question was whether it will be taken through the IBC process or there could be an outside IBC process which perhaps could be found. Well, we know it's going through the IBC and now potential suitors are lining up. Ritu is here with details. Ritu.
That's right, Prashant. Nearly 8 years in the making, and now we understand more than 24 suitors, including some of the country's largest conglomerates, one of which Nigel was just talking about, are lining up to acquire Jayaprakash Associates under the bankruptcy law. Names like Adani Group, JSW Group, Oberoi Realty, Vedanta Group, Welspun. These are just some among the 25 potential bidders that are expected to submit their expressions of interest today. We've been reporting that the deadline for submission of EOIs, which has already been extended twice, closes later today, and banks do anticipate a few last-minute entries as well. Keep in mind, given that NCLT has ruled out bids for individual business clusters, suitors will now have to bid for the entire company, and that will include interest in real estate, cement, hospitality, engineering, and construction, where the company does have some prized assets, which is really luring the suitors. There's also huge debt at stake, almost 57,000 crores of claims under the IBC. But keep in mind, we had reported that the SBI-led consortium of banks has already transferred their stress loan exposure to the NARCL, already received about 15% of the amount, which is 1,800 crores in cash, which will reflect as recovery in the current quarter. But that said, this is still the EOI stage, more than 24 suitors, yes, but the real test will come when final bids are invited, and we'll see how many of them actually put real offers on the table.
All right, absolutely. And, assets are lots of assets, lots of good assets, lots of, remember there was that cement plant which went to Dalmia, and then, of course, that transaction never went through. Some high quality assets, some not so high. But suitors are lining up, as Ritu is pointing out. Thanks very much for that. Now, let's focus on the CDMO space. Kotak has come out with an initiating coverage on the space. Vinny is now going to tell us what they're saying, what their thesis is, and what are their top ideas in this space. Vinny, over to you.
So yes, in terms of the note that has come in from Kotak, they've initiated coverage on 3 specific stocks in the CRDMO space. That is Piramal Pharma, then we have Syngene as well as Sai Life Sciences. Now, for Piramal as well as Syngene, they've initiated coverage by rating. For Piramal Pharma, target price 300 rupees, Syngene target price is 700 rupees. For Sai Life, it's a reduced rating, but a target price is 875 rupees per share. Key factors that they think will pay out for this segment and sector, especially the CDMO side, is one, the rising R&D outsourcing business from innovators from across the globe. That may continue. They expect that to see a further rise. And do not forget, India surely will be benefiting from this because of the shift that is coming in terms of the supply chain from China towards India side. So that is one benefit there. They expect the CRDMO segment actually and the market to quadruple in the next decade. An important one there. Supply chain rejig, like I was mentioning, a gradual improvement in terms of funding that we've seen, as well as niche tech is something that is driving the growth and will drive the growth for the company over the next few years. Other than that, in terms of the base case also, the shift that we're seeing in terms of China, what Kotak is saying is that at least India will be able to capture that 30% of the demand shift that they may see from China will come to India. So that is still going to be a very huge amount in terms of the opportunity that comes in for Indian players. Now, in terms of Piramal Pharma, they're expecting a revenue growth of around 13% over the next 4 years. Syngene around growth is around 14% is what they're seeing, while Sai Life is a 17% growth over the next 4 years is what they're watching out for. In terms of valuation, they still believe that Piramal Pharma is much better valued versus a Syngene or Sai Life, and Piramal Pharma is still much lower valued even when you compare it to global peers. So that is why it's a much more of an interesting bet coming in for Kotak in terms of Piramal Pharma, then Syngene and Sai Life.
Okay, all right. Thanks a lot for that, Vinny. Well, let's get in Jay Bala of cashsecures.com who joins us on the show. Hi, Jay. Before we get to the levels, how are you feeling? Bullish or bearish?
I'm changeably bullish, Nigel.
Yeah, bullish now.
Fickly bullish.
Let's get to the levels then, Jay, because the last many weeks you have got it right and kudos on that. But suddenly the markets has found momentum Is this the real deal? Are you not looking at levels now sub that 21,000, 20,000? I mean, sometimes I worry when I hear those levels. But what are the levels now? We're at around 23,700 or thereabouts. Where are we headed?
Actually, the markets have done a few good things, but that have not eliminated some bad things. So I'm looking for. I was looking for some things to get eliminated so that we get clarity. We don't have 100% clarity. The good things for the market first is that I mean, last week when Prashant was talking to me, he was about to come back to me about the USD INR after Lata finished, but unfortunately we ran out of time and we couldn't have got it. USD INR was breaking out of a head and shoulder stop on the day we were speaking last Tuesday. And it is the reason why it's come here at 85.5 is because of that. That's bullish for the equity markets. But and if what we missed out last week, what we can still continue to be a valuable input is that if the Reserve Bank allows it to appreciate, it can get to somewhere close to 83, even 82.5. But I don't know if that's going to be possible if the Reserve Bank is now allowing the rupee to appreciate freely. Number two, we had spoken about small caps 3-4 weeks ago, and I said that small caps is likely to rally from 14,100 to earlier level at what projected 70,000, slightly short of that to about 16,500. Small caps have done 16,500 now, and they seem like they might still have one more higher highs to come through. It's a similar situation for mid caps and micro caps. But the bad things are that there has been considerable amount of damage done to the FMCG sector, auto sector, consumption, and even the nifty IT sector. And Reliance is definitely not helping bulls so far. So given these heavyweights that are doing these things, I don't know what the good things that we spoke about will counterbalance that. So the levels we're talking about right now, we are looking at 24,230 as the resistance. I'm anticipating the market to first pull back somewhere closer to 23,275, and then possibly push back about today's high. So a pullback due, and as I said earlier, I'm fickle about my bullishness, but as the tapes is telling me right now, is asking me to be bullish, but the structure hasn't eliminated some of the bearish things for the markets as such.
It's been a long, long while, Jay, since I've heard you say that. Normally you say a visit down and then later on a visit even lower after that. But now you're saying maybe a 400-point pullback and then brace for a 1,000-point rally, which would mean that we move to, above that 200 DMA mark on the Nifty. Jay, just stay with us. For the time being, we'll slip into a short break. You come back and we'll get more picks out of Jay. Stay with us.
Welcome back. Nifty is ending flat around 23,650, about 200 points off from the session highs. The mid and the small cap index down over 1%. Jay, what about individual stock trading ideas? What would you have for us?
Yeah, I have a couple of names today, Rima. The first one is Blue Dart, and Blue Dart is thrusting past a downtrend line from the 2024 highs, and it's well above it. And it's an economy-facing stock. Probably there is some message here. A stop loss at about 5,700, and as long as 5,700 holds, the stock is bullish and good for more. The next one is Persistent. I've been bullish on this since October 2022, and it looks like the high that it registered in December 2024 by outperforming the market is probably an incomplete high. And the recent low of about 5,000 is just slightly above maintaining the bullishness for the structure to clock one more record highs. So as long as 5,000 holds, the stock is bullish. Maybe it doesn't get as high as the all-time high, but possibly pushing somewhere close to it.
Jay, just to I have your view on Nifty Bank as well. Are you turning bullish here, or are you kind of saying overall in the market very briefly? I know what your view on the Nifty. You're saying pull back to 23,200, then one more swing high.
I still haven't dropped my bearish anticipation, Prashant, but I know I'm a slave to the tape. What the market is saying right now is, there are both options. The markets are finely balanced between the bullish and the bearish case. And as long as some of these bearish things that I spoke about, as they are not eliminated, there is still a risk for the market to the downside. And the main risk actually comes from the dollar index. The dollar index possibly bottomed on the 18th of March. And also, there's a possible signal that's coming from gold. Gold has possibly got one more higher highs to come through, fresh all-time high. And post that, if what I'm seeing is correct, it's if gold gold has a potential to drop something bigger than what we saw in 2011 and 2015. Basically, if that were to materialize, gold is saying we are entering a deflationary situation. So, in a deflationary environment, it doesn't spare any asset class. It will be only the dollar that succeeds. So watch out for it. It's just latent at the moment. We want gold to do what I'm anticipating to do. Only then the realization will happen.
Okay. If you were a fundamental analyst, it's simpler. You will say, I'm neutral. I'm not bullish, I'm bearish. But as you said, you're a slave to the tape. Fair enough. Let's quickly run through Nifty Bank and Nifty IT as well, because you've got calls there, right? You've got a view.
Yeah. See, ICICI Bank still got one more higher high to come through. And I think once that's complete, probably the banking index will also start to slide lower. And I'm anticipating that resistance to come about 52,600 to 52,900 on the banking index. When it comes to the IT index, it's got a weak bounce pending in the very short term, possibly somewhere close to 38,900. If we see a strong rejection from 38,900, which I think it might be the case, because I'm anticipating the NASDAQ futures to get rejected somewhere close to about 20,655, currently at 20,300. So I think that will be in sync with the IT index. IT index, as I said earlier, it shouldn't have closed below 37,000 last week, and it did. That's not a positive. But if it needs to do reparation to recover the bullishness, it needs to do a lot of work. Let's see what it does around the 38,900 mark.
Okay, all right. Jay, stay with us. Before we wind down the show, I want to pull up an intraday chart on the Nifty, actually, because that's moved to the low point of the day. The last tick is absolutely at the lows of the day, and it seems, there is some selling that's crept in. Wipro has come off. Tata Motors is one stock. Pull up the intraday chart on a few of these, auto names. I think pull up the auto index, actually. Tata Motors, Maruti, both of them have moved to the low point of the day. So sharp downtick is what we're seeing on both those two. TCS, the tech index as well, it's done a relative outperformance, but towards the end of trade, that is one has slipped from the high point of the day. So quite a bit of selling is what we observed in the last few minutes. So let's wind down the markets. Then we go with the cut-off close around 50 points. The broader markets, well, the Nifty paused a little bit. The broader markets came in for some profit taking. On the Nifty itself, IndusInd Bank was the big loser, down close around 5%. Dr. Reddy's down 3%. Adani Enterprises down 2%. On the flip side, your Ultratech Cement that did well. Trent as well bounced back. Bajaj Finserv, well, that was another stock that was up close to around 2%. And Grasim as well, up close to around 2% in trade.
Well, let's get to some of the losers then. IndusInd Bank down 5%. So stock continues to crumble, still not at the lows that it was, which is closer to 600, when the bad news first came out. But IndusInd Bank under severe pressure. Dr. Reddy's, Adani Enterprises, Coal India, Adani Ports, auto names like Bajaj Auto, M&M, weak in trade with a cut of nearly 1.5%. Reliance Industries crumbled. State Bank of India weak.
Absolutely, and lots of movers on the upside and downside in the broader space. Actually, Zomato, Dixon, PG Electroplast are some of the broader market losses that we had, and there were also losses in names like Dam Capital, HCC, Kaveri Seeds, Jyoti Structures, Iron Exchange. Just to name a few. Nifty 50, I think because it's the adjusted close, I think the adjusted close is slightly in the green, 10 points higher, 23,668 is where we are closing at. Well, I think it's a wrap on this edition of Closing Bell from all of us here. Goodbye, but more coming up on Markets Forward in just a bit from now.